The issue of waiving Nigeria's sovereign immunity, by government officials while signing loan agreements with foreign nations and interests has become a major source of concern for various stakeholders in the country. The implication of such an arrangement, according to those who spoke to a Rice sister outfit, This Day newspaper, is the seizure by or forfeiture of national assets in the event of a default in repayment plan. Last week, the House of Representatives summoned the Honorable Minister of Transportation, Honorable Rotimi Amechi, and the Honorable Minister of Finance, Budget and National Planning, Zainab Ahmed, and Minister of Communication and Digital Economy, Issa Patami, over a loan agreement with China, which contained the waiver clause. And according to the House Article 8, Section 1 of the Commercial Loan Agreement signed between Nigeria and the Export-Import Bank of China, concedes Nigerian sovereignty to China. The lawmakers had picked holes in the $400 million loan agreement for Nigerian National Information and Communication Technology Infrastructure Backbone Phase 2 project signed in 2018. The controversial clause in the agreement signed by the federal government by the Federal Ministry of Finance, borrower on behalf of Nigeria and the Export-Import Bank of China, the lender, on September 5, 2018, provides that, quote, the borrower hereby irrevocably waives any immunity on grounds of sovereign and otherwise for itself or its property in connection with any arbitration proceeding pursuant to Article 8(5) thereof, with the enforcement of any arbitral award pursuant thereto, except for military assets and diplomatic assets. This is really a very, very important issue, because we've seen a lot of cases, around this. This was a bone of contention during a PNID and the like. So, Adesuwa, what's your take on this?
Okay, so indeed, there are growing concerns given the numbers of arbitral award either awarded against Nigeria or those that are yet to come to light. As we have heard many, experts say that, there are so many that Nigeria has signed and it will come back to haunt us. But I think that, we should also break it down. What does this clause actually mean to waive the sovereign rights of a nation? So apparently, this is a standard clause in all of these agreements. And it's basically saying, you will have to let go of your assets. This is not a political relationship where you can then plead your sovereign rights. It is an economic, contractual agreement.
Commercial transaction.
It's commercial. Yeah. So you cannot then say all of a sudden, if you cannot live up to the terms of this agreement, or you want to take over our country, no. That is just not how it works. You sign into these things, and it's serious. That is why we should dot the I's and cross the T's when we are signing this agreement. Nobody's trying to take over your nation. But if you do not meet this agreement, and we've seen it on the continent, a lot of people are skeptical about these Chinese loans that they are choking.
Zambia, for instance.
And many more.
Zambia is almost taking over.
We're seeing it everywhere, but... So African leaders need to be deliberate about this contractual agreements they are going into. If you simply cannot meet up to these agreements, don't sign them.
Well, I think that the National Assembly is perfectly in order to raise concerns and to ask questions. It's the House of Reps this time around, and the House of Reps has summoned the affected officials of state to appear before it on August 17. Before now, the Senate has also expressed concern. And there are other stakeholders who have said, look, it shouldn't just be this particular agreement with regard to the Galaxy backbone, that every other agreement that has been signed on behalf of the Nigerian people should be reviewed. In fact, an NGO has already decided to go to court to insist in that regard. That is the socio-economic and accountability, socioeconomic rights and accountability project, SERAP. They are going to court. They are saying, look, Nigerians need to know all these agreements, what are the terms, if any interest has accrued, we would like to know in this regard. But China plays a major role in this particular case that the House of Reps is bringing up. And China is the biggest creditor to developing countries under its, what it calls the Belt Road Initiative, under which it has been given loans to countries around the world. Now, these loans are very easy to access. They are addictive. The interest rate is very low, and many countries have taken to this to develop infrastructure, and particularly many African countries and developing countries in Asia are indebted to China. And the attraction, of course, as I said, is that those loans do not come with the same conditions that you have from the Western, axis. And with the Western world trying to withdraw and look more inwards in terms of the management of its own resources, China has been filling the gap. And the big concern about China is that China is running a debt trap diplomacy. And that's why when you hear any country taking loan from China, then there is a big concern. Everybody is looking at it with a fine-tooth comb. And you were talking about this sovereignty and assets. Now, that Article 8, subsection 1 in that particular agreement, as reported, talks about in the event of an arbitration, right? And also talks about property that may be attached. And I guess that's what many Nigerians are concerned about. When you look at the example, for instance, of Sri Lanka. Sri Lanka took a loan from China to build the Ambantota port. Now, eventually, it had to give majority stake shares in that port to China when it could not service its debt. Now, the people of Sri Lanka, when that happened, also protested the way Nigerians are, expressing concern now. In Zambia, which you mentioned earlier, China has taken over the National Broadcasting Corporation of Zambia. It wants to take over the National Electricity Company because Zambia has not been able to service its debt. Djibouti is another country that benefited from Chinese cheap loans, as it were. Now, China helped Djibouti to build airports and to build a new port. Now, China has seized the port. So, similar issues with other countries like Kenya that have also had to protest. So those who are expressing these concerns, I think they are in order. It's not enough to just say it's a contract agreement or to say that it's a standard procedure. The truth of the matter that African leaders have to learn is that, one, there's no free lunch. China is not offering free lunch. Now, when you take a loan, you must pay. If you're unable to pay it, then, of course, what you have signed, if it says your assets will be taken over, either through arbitration or on the basis of the agreement, then you are bound by that agreement. And then third, as we saw in the PNID case, Nigerian leaders tend to drop the ball. African leaders are complicit. So it's not enough for us to blame China. Because there's a process of signing these agreements. And the question we should ask in this particular case, did the Ministry of Justice look at it? Who are the officials who vetted the agreement? Because Nigeria cannot just be appending signature to agreements, whereas due process, there is a standard procedure for committing the people of Nigeria at the level of loans. And, of course, the debt burden in Nigeria is rising.
All right, Dr. Abati, great point you raised there. Let me just even make a quick instance. Guinea. The GDP of Guinea is $10 billion. And guess what? China gave them a loan of $20 billion.
Yes, China is very generous.
All right, that's all on Headline News. We'll take a short break now. When we return, we'll have the trio of Rotus, Michael, and Aaron to give us updates on Africa Global Business Update and COVID-19. Stay with us.
Welcome back to the morning show here on Arise News. Rotus Odir is now here with Africa Business Update. Good morning, Rotus.
Good morning, Doctor. Good morning, Adesuwa, and good morning, Rufai. So, and happy new month. So we begin, of course, with a webinar that was hosted by EY Ernst & Young. This was regarding the Nigeria Sovereign Wealth Fund. The Olusegun Aganga, former Minister of Finance and Minister of Industry, Trade and Investment, was the keynote speaker. We also had the country manager for the IFC, MASC and Lore, and also Uche Orji, who's been on the morning show, CEO of the Nigerian Sovereign Investment Authority, and Mr. Kyari Bukar, former president of the Nigerian Economic Summit Group. As a quick summary of the NSIA that they went through during this very interesting webinar that was discussed with regards to the economic importance of the Nigerian Sovereign Investment Fund. They looked at what the criteria, what the fund is meant for, which is supposed to be for stabilization, future savings for future generations, and third, infrastructure. Also, Uche Orji also took us through the amount of money, the seed capital that had been put into the fund. All right, so there we go. So stabilization, as I just said, savings for future generations, and then investing in Nigeria's infrastructure. Those were the mandates. If you look at total government contributions, we need to take a step back. Total government contributions amounted to $1.7 billion. Initial seed capital of $1 billion and 3 tranches of $250 million that had been put into the fund. Retained profits, according to the CEO, Mr. Uche Oji, between $350 million to $400 million. That is what they've gotten back on investments. However, he said you cannot create a working system in Nigeria if you don't have effective capital formation. He was talking about the fact that there needed to be more consistent investments in the fund. Also, he was also talking about the fact that there had to be, the seed capital should have been put into the fund much earlier. This is a fund that was set up 2011, and the investments didn't come until much later. He also said that, look, other sovereign wealth funds in other countries focus on stabilization and focus on saving for future generations. They don't really focus on domestic infrastructure. And he said that has created some complications working with state governments and also trying to, net out the amount of infrastructure investments that need to be made. But by and large, he said that the Sovereign Wealth Fund is on the right path, and they're just looking for more investments in the fund down the line. Moving on to the Minister of Transportation, Rotimi Amechi, you were just talking about him a few minutes ago. He's talking about the sovereignty clause. That the terms contained in the agreement is not as if we are signing off the country's sovereignty. What we do is that we give a sovereign guarantee, which is an immunity clause. The clause is that in case the country defaults, China will come to collect the items agreed upon. There are specific items that are agreed upon with this agreement. Now, of course, at the the Forum on China-Africa Cooperation back in 2018, President Buhari, Xi Jinping, President Buhari was talking about the fact that they had commissioned this Abuja-Kaduna rail line back in 2016, and the $500 million loan that was obtained for the China Exim Bank, which is a portion of the $874 million loan that the Goodluck Jonathan administration got in October of 2019. Now, of course, what Amici is saying here is that, listen, if Nigeria wants to grow as far as infrastructure, we need to borrow money. There's just no going any other way about it. But he wants to calm Nigerians down and say, hey, listen, this the loan we've taken, there was a 7-year moratorium. It's at 2.8% interest, and we can service the loan. So Nigerians need not be worried. However, you all just made some salient points with regards to how many of these loans are out there, the total debt burden that is being increased, because there's another, 22.9 billion that's being sought after for Lagos, Calabar, and other items. So we're getting more debt, which is going to be piled on to future generations. But what are you going to do? We need the money. But the key takeaway here is that Nigerian sovereignty is not being signed away. Essentially, you're just saying that, look, Nigeria, if you default, you cannot come and waive your immunity clause in front of the Chinese and say you can't collect the assets. What the assets that were agreed upon, that is the actual, what is infrastructure that's being built. If you default, they can take over those assets, not the sovereignty of the nation. We move on to Rio Tinto. Rio Tinto is a massive conglomerate that is into mining. The key thing here is their half-year earnings for H1. 4.5 billion from iron ore, much larger than copper and diamonds, aluminum, and energy and minerals. They are looking to invest in the Simandou mine area, which is in Guinea. The Simandou mine area, if I get this pronunciation correct, is the Nzerekoria mountain region. It is a massive iron ore region that is rich in the mineral source. So Rio Tinto has been looking to go and invest there. What has been holding them back has been a dispute between a man called Sam Benitez, which is he's an Israeli billionaire. He's been fighting with the Guinean government over ownership of the Simandou mining area. They actually, everybody wrote off the area. They're like, this thing is going to be locked up in legal proceedings for the rest of time. But just last year, he finally relinquished some of his holdings, which has now put a lot of attention into this particular mining area. We've got some images that we should show for our viewers of this particular area. But essentially, it's broken down into 4 blocks. Block 1 and 2 is being owned by the Chinese, at least the ownership interest, Chinese and Singaporeans. Block 3 and 4 of this mining area is being held by Rio Tinto and the Chinese again. So China is coming up again. China has massive interest in Guinea, in Nigeria, all over the place. So it's a pretty big investment that is being looked into. They're looking to take this off again in Guinea with regards to the rich mineral sources. By the way, if anyone is interested, their earnings were down 20% from half year for about $4.5 billion to $3.3 billion. Finally, Telcom is a South African telecommunications firm. They are muscling their way in South Africa into financial services. They're looking to set up an insurance company. They're also looking to compete with banks in South Africa in order to provide financial services. So you are seeing telecommunications firms that have massive amounts of data on the amount of people that are using telco services in South Africa, bridging the financial inclusion gap. They are looking to compete with South African banks by going into financial services and providing insurance and a number of other items. And that's our Africa update.
Well, Rotus, I mean, I would like us to just, focus a little bit more on the sovereign wealth fund. You will recall that when the Nigerian Sovereign Investment Authority was set up, I think first in 2011, then by 2012, the governors of the states were beginning to kick. They were saying that it was illegal and unconstitutional, and the governors, the state governors in Nigeria at the time said there was no need to save for the rainy day. But if anything, what we see today is that there is need to save for the rainy day. That's a lesson that perhaps COVID-19 and all the other issues that we're facing will seem to have taught us. Issues with oil, issues with unemployment, issues with poverty. And I think it's important that the ANY alumni, focused on how to use the Sovereign Wealth Fund as a driver for economic growth. Yeah. And I read the paper presented by Aganga, and it gave very interesting examples from different parts of the world: Saudi Arabia, the United Arab Emirates, Singapore, and also, I think, Malaysia, about how, in fact, the Sovereign Wealth Fund, in terms of investment, can assist a country and create jobs and provide opportunities. Yes. And I think that perhaps we need to maybe take a second look at the mandate of the sovereign wealth of the NSIA in terms of also bigger involvement in local projects. And then perhaps maybe we need to save more if we can, and probably make savings in the sovereign wealth fund a first line charge because its strategic value has not properly been explored by the Nigerian government. I don't know what you think. I
agree. It's just that the infrastructure focus, what Mr. Odir was saying was that most sovereign wealth funds, as you've just said, they focus on savings and they focus on stabilization. The infrastructure part can get a little complicated. So he probably would like to move that away because we already have the Ministry of Transportation and other infrastructure focuses in Nigeria. So maybe the sovereign wealth fund should just focus on savings and stabilization and leave out infrastructure so they don't have to deal with the state governors and so on.
Okay, thank you.
Very much,
Thank you, Rotus.
And for more business update, let's go to London, where Michael Wilson is standing by. Hello, Michael. Good morning.
Good morning.
Good morning. I'll take you to Asia first of all, as I normally do, and a very, very mixed picture, quite honestly. Sentiment helped, though, by Chinese factory activity expanding at the fastest place in July. That's what their official figures are telling us. The Nikkei added 2.1% because the yen is slightly cheaper than it was and South Korea's flat. I'm going to take you straight to some corporate results now because these are important, and this is an indicator really of what's happening. This is HSBC. It posted a 65% tumble in first half pre-tax profits as the pandemic and its impact on businesses, and particularly because this is an Asia-focused bank. It's very important to see how it's actually faring at the moment. It is Europe's biggest bank by assets, and it was lower. The actual achievement of them was lower than the average of analyst estimates. And this has reinforced the fact that banks like HSBC and lenders across the world are having to absorb souring loans at a time when companies from aviation to retail and hospitality, you name the sector, are reeling from the impact of the COVID-19 pandemic. And of course, a lot of controversy over Hong Kong and so on has been criticized by the US and other companies for apparently endorsing the crackdown on Hong Kong. Very, very difficult days to come. Now, so as far as general things are concerned, US and China tensions are likely to remain in focus. Mike Pompeo, the Secretary of State in the United States, is saying once again that there will be a clampdown on various Chinese-controlled, state-controlled software companies, and this pushes right into focus the saga of TikTok. Now, TikTok is you probably if you don't know it, your children certainly will, and it's a video sharing device. Its parent ByteDance is very anxious not to lose what it expects to be a big rival struggle with Microsoft and YouTube in the United States and the rest of Europe outside China. This is very important indeed. And Microsoft's boss met President Trump over the weekend and said, don't worry, the security, the data from the United States will not be shared with China. But this is very, very important for TikTok and also very important for Microsoft as well. So you've got this three-way struggle. But basically underneath all this is this, once again, the spectre of China and its data and what it intends to do with it. And it's something else unsettling investors. That's my light on. Sorry about that. China, also, the US lawmakers have not agreed the stimulus package yet, and they still have to do that. So let's talk just a brief recap on what happened in the Eurozone at the end of last week. And we had some flash GDPs there on Friday. Second quarter reading on a quarterly basis, minus 12.1, a huge decline, actually, from the 3.64 that was registered in the first quarter. So all that's going on. Stock markets mixed on Friday. European equities, again, worried about this stimulus package. Will it happen? Won't it happen? When will it happen? It should happen today. Will it? I don't know. But the arguments are still continuing. Apparently, there was some talk of agreement over the weekend. FTSE 100 was the worst performer. The only thing that's keeping stock markets up throughout the world are high-tech stocks, witnessed by the Nasdaq. If that wasn't there, then stocks would be down about 2.5%. So the week ahead, here we go then. So it's a big one. First of all, we've got the US employment report. Now, you've studied with me the various weekly ones that we've had, but this is the monthly one. And, well, what's it going to be? Where will the employment rate actually be? Will it pull it down from 14 to 11%? That's what analysts are possibly saying at the moment. And this month's pay rate will see another 1.9 million people added to the labour force. So that may get unemployment down to about 10%. But let's just have a look at the very important thought about this. These figures that we get on Friday do not include the 2 weeks where we've seen the US reimpose lockdown across various Sunbelt states. So you have to weigh that in to what we actually see on Friday. Bank of England meeting on Thursday, at least the results of it. They tend to meet late Wednesday and then give a press conference, a news conference at noon. There are a lot of chat about whether or not negative interest rates are coming in. An ex-governor, Sir Mervyn King, who actually was the person who introduced quantitative easing in the 2009 financial crisis, has said now is not the time. You have to say, though, are consumers willing to be pushed back to spend? I don't think they are. They appear to be saving and paying off their debts. BP tomorrow, here's an important one. Now, a big write down there. What they have not done is like the Royal Dutch Shell, for example, and it's tried to keep its payout to its investors intact in terms of a dividend. That's why you tend to get involved with an oil company. You do not want to be interested in the costs of whether they're going to find oil or not, or where the development costs are going to be, the equipment costs and all the rest of it. It's merely about dividends. That's why investors and BP have tried to keep that going. We will test the wisdom of that tomorrow when the results happen. Okay. Finally, as far as corporate stuff is concerned globally, I think the most interesting one is Disney. Again, how will this compete against the likes of Netflix and so on? The biggest problem, of course, is the closure of their theme parks. There you have one. And not so much movie production, but actually when the footfall to their theme parks is actually going to start again. So again, an interesting reflection on the pandemic. And commodities, terribly briefly. Oil prices fell today. There's feeling about a bit of a glut. But gold, here's a good one. Now, will it reach 2,000 this week? And will investors pull back? I don't know, but it does tend to spike, doesn't it, at those tiny little suspicions of things actually going wrong. And I'm certain there'll be plenty of more of that in the coming week.
Okay, Michael, quickly, I just want to talk about two things. Number one, ByteDance trying to get a deal with Microsoft late minute. I saw, stories about the meeting Satya Nadella had with Donald Trump. Let's see how that pulls through. Let's see how data privacy can be restored to most of those great data that TikTok does get out of America. I also want to talk about Sonia. Sonia kicks off today. Those are interbank rates, a new regime for sterling interbank rates, overnight rates. You want to talk to me a little bit about that?
Sterling, yeah. I mean, I think that what we're seeing is we're going to see a weakening euro. I don't think there's any question about that. I think sterling, because it's a relatively small currency, tends to flight around the strength of the euro versus the strength of the dollar. I don't think that anything overnight particularly is going to help it move one way or the other. I think the key thing will be the amount of confidence put back in the markets by the results of the Bank of England meeting on Thursday. I think that for the moment, if I may say so, sterling is a confidence play rather than an intrinsic one. If you get my drift. In other words, we're such a small economy that there isn't really a great deal to play for. But if we want to sell more debt, which we undoubtedly will, I think anything that's breeds confidence in sterling is going to be good, and we may well get that from the Bank of England on Thursday when we get another view of what they intend to do.
Michael, just a few more comments on TikTok. Now, on the surface of it, everybody talks about safety and privacy of data and all of that. But is there something else to this panic about TikTok, which in my view is just an entertainment and an amusement app, that many young people across the world have embraced. But in India, TikTok has been banned along with 12 other Chinese apps. In Saudi Arabia, 5 women have been sent to jail for using, TikTok. What exactly is the issue? Is this, the fear of China?
Well, the individual companies will make their own judgments about it, and India will do what it likes, as will Saudi Arabia, because they can. I think that what I was trying to get at is that the TikTok thing is about TikTok itself and its parent company not wishing to lose a massive audience in the United States. Yes, it is an amusement thing, but don't get carried away with amusement. Get carried away with the importance of data. Data is the new currency, and anything, and however crazy it may seem to us, if I may include you in my sort of age bracket, roughly, Doctor, to our kind of generation, it's meaningless rubbish. But actually, to people who want to get their hands on youth, and they still do, and they still want to advertise to them, data is absolutely important. And I think that we will, in years to come, rue the fact that we were not more secure about this, because there is no question in my mind that China wants to get its hands on it, as witnessed by Huawei as well. And don't get me started talking about sovereign debt, because that's a whole other issue, which you've explored already this morning.
Well, thank you very much, Michael Wilson. We'll see you tomorrow morning.
Well, indeed. Let's now turn to Aaron Akerjala with updates on COVID-19 pandemic. Good morning, Aaron. Good morning,
Aaron.
Good morning, Doctor. Hope you enjoyed your weekend. And good morning to you, Rufai.
Aaron is my hero.
It's good to be here today. And let's get straight into the numbers today. We'll start it off from Africa and how things are actually playing out. Right now, Africa are close to 1 million confirmed cases. Now, this is a continent where initially they were being celebrated and praised globally for how they actually handled the virus, but that is not looking like it anymore. It's just looking like we're just getting started in Africa. You can actually see the number right now, 945,882. Those are the number of confirmed cases of COVID-19 here on the continent, and it's still rising. And when you put into the mix the equation that under testing is prevalent across the plane, then certainly that number is far worse than what it is right now, and which is quite fearful. And on the right side, before we move on to some of the data, on the right side of the screen, you can actually see the regions in Africa, from the southern region to the northern region, the western region. You can see how much South Africa, which accounts for over 51% of the confirmed cases in Africa has actually swelled up that number in that particular region. Now let's move into the numbers, and you can actually see that as many as possible from Africa, from the Africa region, South Africa certainly still is number one in terms of COVID-19 with over 500,000 cases at the moment, before Egypt with 94,000 cases, Nigeria is third with 43,000 cases, and Ghana are fourth with 37,000 cases. Moving on to help us break it down, you can actually see the progression of how things started for Africa. We thought we were handling the virus, but unfortunately it's now beginning to overwhelm us, and as we've been saying, the healthcare system will be tested. It's already being tested. It will be tested even the more, and it will be stretched to the max, and we are hoping that we will be able to have enough to be able to cater for this, because you can see the sharp projection as it keeps going up. Although some will say it is still oscillating at some degree, but trust me, as they say, it is not slowing down by any degree. Now, moving on to the next region, let's actually talk about what is happening in Gauteng, where it is the epicenter both for number of infections and both for the number of deaths. At the moment, 180,000 of the 500,000, which is still very, very high, is in that Gauteng region in South Africa, then Greater Accra, then Lagos also experiencing a large number, then Grand Abidjan, then Addis Ababa. Now, we see all those things, and it gets worrying for us, because we found out that at some point when there was a massive lockdown, things seem to have slowed down. As soon as lockdowns were actually opened, things just began to spiral out of control. And it's rather unfortunate for what is happening in Africa. We're still keeping an eye on it, and we're hoping that it gets better. But in the meantime, bringing it down here to Lagos State, to Nigeria, Ogun State, right now, there are reports that there was a massive confrontation between the state government, the health officials, and the parents who were supposed to bring their pupils to get tested as a requisite to admission back into school, because they told the government has said that anyone who is not cleared and COVID-19 free will not be asked to return back to school. But unfortunately for them, some said that some of the parents lamented that they were slapped with a bill of 25,000 naira for each patient, for each child to be tested, and which is quite high if you ask me, putting into cognizance what has been happening in terms of the economy, in terms of people losing their jobs. They're still trying to put themselves together to send their children to school, and you say that they have to pay 25,000 naira to go undergo a test, and they must come out negative. If it comes out positive, certainly you're sending that child back home, and they will not be admitted into secondary schools for those who want to go and write exams. So which has been worrying, and it's been back and forth with the government. The government just told them, go to this particular secondary school, to this particular hospital and get tested. And when they got there, what they saw has actually frightened them. Let's see what becomes of it today, whether the governor will actually intervene into this particular matter, because they told them they were given between Friday and today to get tested to ensure that they get to resume in the course of the week. Let's see what actually becomes of that. Now, moving away from the African region, let's actually look at the U.S. The U.S. certainly has been bringing quite a lot of controversy in terms of handling of COVID-19. At the moment, you can actually see the 4.6 million cases have been recorded plus. And it is quite frightening, understanding that it is still being debated. The handling of the virus, how to take care of the people who have been ravaged, no thanks to the virus, has still opened the U.S. to a lot of ridicule, because the latest coming out with the exchange of words between Nancy Pelosi and Dr. Birx. You can actually see the numbers there from Mississippi, Oklahoma, Missouri, Alaska. All these states are experiencing a major spike in numbers. Moving on to the next slide, they also even explain some other places like Maryland, Nebraska, then Minnesota, Puerto Rico. We are seeing a major rise in the number of cases, and they still talk about who is the right person to listen to, who is the voice of reason in the U.S. All right, Nancy Pelosi said certainly cannot be Deborah Birx, one of those top infectious disease experts in the U.S. She said, you rather listen to Dr. Fauci as against Deborah Birx, because Deborah Birx was being appointed by Donald Trump, and Donald Trump has been misinforming the public, and Deborah Birx has come out to hit back and said that she's always given data, and to her defense, she's always brought out data, although people say as much as possible, she peppers the crack when dealing with Donald Trump. But what else do you expect when you are actually dealing with an eccentric leader like Donald Trump? Certainly, you have to tread with caution. And it's been back and forth. But one thing remains clear. The U.S. are not handling this outbreak very well. And she even went on to say, talking about Deborah Bex, that the virus that has been seen recently, because July, the number of infections in July alone was well over 1 million, which was way more than what we saw in March and April. And she's saying that this is getting out of hand. But at the moment, it's still politicking here and there. It is still rhetorics here and there. And it's unfortunate what is happening in the U.S.
Well, Aaron, I would like to comment briefly on your report on Ogun State.
Yes.
The Ogun State government, like some other states, has decided to reopen not just schools, but also mosques and churches. The schools are to reopen from August 4, and this is restricted only to students in SS3, students who are going to sit for the school certificate examination, which starts on August 17. Now, but I think it's surprising to hear that they have to pay 25,000 naira to take a COVID-19 test. I mean, many of the parents of these children cannot even afford, even if it is 5,000 naira. And I hope that the state government, seeing that this story is now in the public domain, will address the concern of parents. Secondly, the teachers and also the parents in July had appealed to the governor to assist the schools with disinfection, with PPEs, and with other facilities that will enable them observe the COVID-19 protocols. I hope that the state government will also listen to that. And I hope that there will be a monitoring mechanism in place as the schools resume. Thank you very much, Aaron.